right, guys, what is happening? And welcome to this live stream. So, before we get into this, we have a lot to go through today. We've got a very interesting survey that came out from Manulife, an insurance company in Canada. I think it's interesting anyway. We'll go through the ins and outs of that. We're also going to go through the markets. I'll split this up into chapters. So if you're watching this afterwards, you'll see below that you can go to different chapters. That's just to help people out and all that good stuff. So please do me a favor and hit that like button. That's what really gets the word out about these videos. It's doing your part to help out the channel. So thank you in advance for doing that. I really, really do appreciate it. And you know what, guys? It's an absolute bloodbath in the markets today. We were just talking in the chat here before we went live, but Trader 586 has been trading since 1994, and he hasn't seen debt markets move like this since then. So it's significant. It's very significant. I've never seen debt markets move like this. I mean, the sell-off in mortgage-backed securities, corporate bonds, people just do not realize the carnage that this is going to create in the highly levered economy that is Canada, the United States, most of Europe, the UK. Unfortunately, we have become these debt-driven asset bubble economies that have been due for a reckoning for too long, too long. And quite frankly, it it was going to happen sooner or later. And you know what? So many people are going to lay casualty to this. They're going to get absolutely destroyed. I mean, people's recency bias is going to really affect them. And real estate is a big one because it's highly emotional. As I tell you guys, there is tons of people right now that are sat on the sidelines, still waiting for their day to buy. And as soon as that comes around, they'll buy in. They don't really understand the risk associated with buying a leveraged product. And let's be honest, the government and all the parties involved don't explain that risk either. But there's a very, very high risk that is associated with any product where it's leveraged, like a home purchase, because that means if the value of that asset falls significantly, you're going to get a margin call. You're going to have to put up collateral. And most people, when they buy a home, they just plumb all their money into it. It's the biggest investment they'll ever make, and it becomes the biggest liability of their life. And that's what people don't really realize. It's only really been during these asset bubbles where people have thought of owning a home as an investment. I never thought of it that way. Whether you rent, own, it's just a roof over your head. Owning, it's like Scott Walters said, owning is really, well, not owning, investing is really when you own like a property that you're renting out, you're cash flowing, you've got Airbnb, whatever. And it doesn't matter what market you're in, all markets are going to be affected. The market will be massively impacted in Mexico by the upcoming recession. The markets in Spain, Portugal, that have seen this influx of cash from Germany, the UK, other places, all the stimulus money, it works its way through the blood and into these cheaper markets that people think, hey, it's in the sun, it's always going to go up, people are retiring, there's so much money. They don't know what me and you know. You see, they don't realize that those people are only retiring because they have the cash from their asset, which is their home. Most people aren't diversified. Rich people are diversified. They're not just 90% of their wealth is locked up in a freaking home, for God's sake. They have it in stocks, they have it in gold, they have it in all these different things. So you've really got to think like rich people think, because that's how they came successful and rich. That's how they retained their wealth, was by being diversified. And you don't have to be very smart to work out that diversification works. I mean, it's really just a thing. So anyway, without further ado, let's bring up the markets here. So absolute carnage. Let's really take a look at corporate bonds. It's unheard of for bonds to fall by 2% in a day. That is a huge, huge decline. You've got junk debt down 3.5%. It's practically at its low, if not surpassed it. In fact, let's take a look here and we can find out. So wow, it's up after hours. That's might just be short covering. But let's take a look here and see the camera's blocking my view. So yeah, so if we go to 2020, the low is set at 86 and it's at 93, so it's still got a ways to go. It's completely erased that dead cat bounce that we talked about that's happened. That's gone now. That's in the rear view mirror. Let's check out some of the other bonds and see what's happening. Triple B rated corporate debt. Let's see what's happening with that. Absolutely falling. I don't think this. Yeah, a lot of these ETFs, you'll note that they came out in 2020. Hmm, that's very significant, isn't it? Because that's when all the stimulus money, that's when everybody was searching for yield. So all these companies thought this is prime time. Let's put out these ETFs and people will buy them and everything will be great. They'll be a safe haven. Even retail investors can invest in them, and it's just been a disaster. The yield on this thing is still miles below inflation, 4.48%. That is a terrible yield in this environment, and that is why it is down significantly. Now, most people don't really understand these things, they just don't understand the environment we're in. And it's important to also understand, guys, the future, because markets are always forward looking and there's no end in sight. That is why everything is collapsing and disintegrating, because you look into the future, it just looks like things are going to get worse and worse and worse, and that this is going to be an economic depression that we're heading into. And I really believe it will be, because these central planners have messed up the system so badly this time that somebody has to pay, and unfortunately that's going to be the taxpayer, and they're going to pay with inflation and probably higher taxes coming up as well. So it's just a terrible, terrible situation that we're in across Canada, the United States, Europe. It doesn't get much better. New Zealand, Australia, throw them in there as well. They're all debt economies, debt driven economies. And that's what really matters. There are some places, believe it or not, where you can still get real interest rate returns. I know. Oh my God. It is possible even in today's day and age. Although really you have to dive into whether the government's measure in that country is accurate of what they're measuring inflation to be at. Because as we know in the Western world, it's incredibly, incredibly corrupt. By the way, if the power shuts off during this live stream, there's a big storm that's happening right outside here in Calgary right now. It's like 10 degrees and it's absolutely pouring with rain. It's been drought conditions for so long that there's going to be flash flooding and all kinds of stuff that happen as a result of this. But just to let you know, in case the live stream just cuts out and we're done. So anyway, let's take a look at some of these other ones here. Did I take a look at the Moody's one? Yeah, I did. So let's go back. Let's take a look at some of these Canadian ones. So XBB down 1%, massive decline. Look at this. Look at this thing. So this thing was at the bottom of 2020. In March 2020, it was at 30. It's at 27.31, and it's still only yielding 2.62%. Like, that is garbage. It's trash. Who wants to own these things? And that's why they're dying. They're absolutely dying. And if we take a look at this other one, same thing. It's dead. It's way below March 2020. All the pension funds, BlackRock, your favorites, that own all these bonds are just getting absolutely just took to the cleaners right now. Not only that, Guess who else owns loads of these bonds? The Canada Pension Plan. You know, your favorite. I mean, we have no choice but to pay into this Ponzi scheme and the Canada Pension Plan. We have to pay into that. We can't say, no, I don't want to pay into the Canada Pension Plan. I want to invest myself and I won't take a pension from Canada. No, we have to pay into this stupid Ponzi scheme from the government, which I mean, they are the, if you want to see I mean, there isn't a worse pension fund out there than the Canada Pension Plan, apart from maybe BlackRock. They invest in all this garbage that is just being absolutely destroyed. Who backs those people up? The taxpayer. Guess what? Just a joke. Um, so yeah, it's just a mess out there. Like the banks annihilated. Um, I mean, this is the thing. Like treasuries exploding with the market seeing this much of a downside and treasuries exploding. I've never seen that before. And if anybody has seen that before, let me know in the comments. In the 8 years I've been following markets, I've never seen this happen before. Like this is just normally when you have like a capitulation, which happened today. Normally, that means that people buy into bonds, but people don't even believe bonds are safe anymore, so they're selling off too. The dollar is strengthening. Really, if you want to learn why the dollar is strengthening, I suggest you check out Brent Johnson. He does some great interviews. In fact, George Gammon and Brent Johnson and Peter Schiff, they recently did a debate. It was very good. It was on George Gammon's channel. He was like the mediator between Peter and Brent, but Brent is spot on with his dollar milkshake theory. So check him out if you want to learn more about why the dollar is strengthening, but it's eventually going to die. You know, so incredible. Everything being affected. Gold being sold off, obviously, because people are getting margin calls. So gold gets thrown in. It's very liquid. Gold is always very liquid. There's always buyers for gold. So people sell gold. They will sell everything. They'll sell oil. You'll see dips in prices in everything when you get this sort of capitulation in the market. So oil will go down at some point. I believe oil will go down significantly, and this isn't financial advice, but that is going to be a hell of a buying opportunity when that happens for buying energy producers. In my opinion, that's what I think is going to be a good investment into the future. And really, so will miners, silver, gold miners. I mean, some of the silver miners, they are really just being crushed, and they're at such a cheap price relative to their historic trend. But I wouldn't even buy right now because there's no way that we're at the end of this market. And I believe there's plenty more downside in gold, silver, oil, all these things. Because at the end of the day, when the markets crash like this, it's like I said, everything is being sold and thrown into it because people are getting margin calls. And this was really one of those days where capitulation was happening. We saw, I mean, the Nasdaq Composite fell. What was it? Nearly 4.5%. Probably hit 5%. You know, a lot of stocks are SSR restricted right now, so you can't even short them. Tesla down like yeah. So the Nasdaq finished up down nearly 5%, broke 11,000. The S&P down 3.88%, entered a bear market. That's the passive investing favorite, the S&P 500. The Dow fell little less, 2.79%, but it's heading down to 30,000. And I remember it crossing 30,000, and it did not cross 30,000 with screaming amounts of momentum. It was on low liquidity in December when everybody was in the Hamptons or in Florida, like I'm talking about Wall Street, and volume was very low. But that's when you saw the big break of 30,000, that number. So that was December 2020. So once we break 30,000, we're back down at 2020 levels in the Dow. And I think it was 29,000 that was the level that was the record high before it crashed in 2020. It was either 28 or 29, I forget. But the Russell just continued to get crushed down nearly 5%. All indexes falling, Hong Kong down 3.4%. Australia is down only 1.25%, but they're just opening up. So that's going to be down significantly, probably in the overnight. FTSE down 1.5%, and the DAX over in Germany down 2.5%. Currency volatility has just ramped up massively as the dollar strengthens. You know, the pound versus the US dollar, for instance, is right at its all time lows. Like, insane. The pound is just getting crushed. And, that just goes to show what will happen to the US dollar eventually, because the pound used to be the reserve currency, and you can go look up the history of that. And these things don't move instantaneously. Like, the US dollar won't just stop being the reserve currency overnight. There's so much dollar denominated debt, and you really need to follow Brent Johnson and his dollar milkshake theory on that. He explains it really well. Cryptos killed, annihilated, down. Bitcoin down 17%, Dogecoin 18%, Ethereum is being crushed, down 18%. It's now down more than its 5-year low. It's actually negative returns now on the 5-year. XRP is down 12%. The thing is, when I mention cryptos, everybody goes, Luke, you don't understand what you're talking about with cryptos. Don't talk about cryptos. You know nothing about cryptos. I know enough about cryptos. I know enough that they are being traded like a risk asset. And you see that in the chart. It doesn't matter what you believe about some fundamentals or whatever. Like, this price chart tells a story of emotion to me. And that's what I look at. So I don't really need to know much about it. And I do know a lot about Bitcoin, a lot more than more people probably realize. But the thing is with Bitcoin is there is an emotional attachment to this, and it goes through these cycles, as you can see. But this is clearly different to previous cycles. I mean, if you look at how extreme this has been, we have never seen this sort of extreme volatility. Now, I just want to be clear, I don't hold Bitcoin. I don't hold any cryptos really. Like, I have a laughable amount of XRP, which is just a joke. Like, I really just put that on as like a gamble. Like, it's like a joke amount. I don't even care. And it's like I said to most people, just if you're buying a crypto, oh, you know what it was? I'd actually done a Bitcoin transaction, and I had some Bitcoin, and this was from before before Bitcoin exploded. And I think I had like maybe $10 worth of Bitcoin or whatever, but that ended up turning out to be $150, $200. So I just threw it in XRP. I don't really care much about these cryptos. As you guys know, I'm not a big crypto bull. I think really the problem with these cryptos is the interference from Wall Street. Some of the ideas, like the ones in XRP, they make sense, but they are so manipulated. For instance, the crash started on Bitcoin during the low volume hours. Like, these crashes occur and they start during the very low liquidity hours, so they can manipulate it to the max and crush all these people who are on margin. So that's really what happens. So these things are so manipulated. And don't get me wrong, everything is manipulated to a certain degree. But these things have been manipulated to the max. And it's like Peter Schiff says, there has been the biggest marketing campaign for crypto in history of anything that we've ever seen. And yet it still continues to fall. And we've never seen crypto in a recession. So nobody really knows what's going to happen. But so far, it doesn't look very good. So the thing is, nobody knows what's going to happen to crypto during an actual recession. So don't believe any forecasts that you know of. But as we can see from what's happening and people are pricing in a recession, what's happening to crypto is not good. So it's very, very true. So anyway, let's get away from the markets. I could talk about these all night and you guys would be bored and probably asleep. So let's switch over to this article, which is just incredible. Some of the information in here, my God, it's enough to make somebody throw up. So, bias remorse, Manulife Bank's debt survey reveals close to 1 in 4 homeowners say if interest rates were to increase further, they would be forced to sell their home. Okay, so interesting point about just that headline. If that was true, let's say it was, let's be hypothetical and play this out. So let's say it's true, interest rates rise further, and then 25% of homeowners go and sell their home. Who is going to buy them? Like, who's going to buy them? Nobody's going to buy them. I mean, we're already seeing sales decline. And really, once we get to August, September, that's when all the teaser rates have expired. That means all the buyers in the marketplace for real estate by August, September will be dealing with these really high rates, which they can't afford. And nobody can make sense of for an investment property unless they have literally had their brain removed as part of some new medical procedure and replaced with some sort of animatronics. I don't know. But I just think this is just absolutely bonkers. Like, if this is true, and I don't think it is, like, realistically, well, maybe it is. I mean, who knows, right? But maybe let's say 15% at a guess. I mean, this survey was 2,000 people. Let's just be clear about that. So I need a bigger pool to actually believe these numbers more. But it's just very interesting because it tells a story of what's going on in people's heads. I'm going to sell my house if interest rates rise. Yeah, good luck with that. And that just goes to show how people don't have a clue what environment they're heading into right now. And it even goes on to say it in this article. That's what I find so interesting. There's some real key points in here which I think are worth mentioning. So over 1 in 5 Canadians what? Over 1 in 5 Canadians, is that a mistake? What? Over 1 in 5 Canadians expect rising interest rates to have a significant negative impact on their overall mortgage debt and financial situation. As many as 18% of homeowners believe they can no longer afford the house they own. That's right now, 18%. That's why I put it in the title for this video. And maybe it will hit home, maybe it won't. Like, we're in that denial phase right now. And I know for a fact, like, there's the following on this channel. There's maybe a couple more people, but these videos aren't going to blow up. Don't get me wrong. And I know a lot of you guys think these videos are going to blow up. And I don't think that, because I believe we're in this denial phase right now. And I think you're going to see less and less people wanting to actually look into this stuff, Googling this stuff, looking at these type of videos, and they will turn away from it because it's too negative and they need to focus on some kind of optimism for their mental health. So you'll see that happen. And another thing which is really, really interesting, I believe, is just what's happening in crypto on YouTube. Because BitBoy, who is a crypto pumper and has been pumping these coins, he's got over 1 million subscribers. He's been pumping these garbage coins throughout 2021. And this guy now is getting like unbelievably low amounts of views considering his channel size. So that's interesting to me, because that's really a window into what's going on in crypto, as nobody's really interested in it at this time. And really, we could just be in that denial phase of the bubble, which I'll bring up on Twitter because I think I posted it the other day towards the end of this video. We're already going 25 minutes here. I don't know where the time goes. I know people probably don't even watch the 15 minutes, but congratulations to you if you're on this live stream, because you're crushing it. You're gonna crush it, and that's the real thing that I want to outline. Because most people, they can't listen to this type of stuff because they just feel like I need to put on Netflix and dream into fantasy land about some soap opera drama that's going on Netflix that is not their real life, and they fall into a trance. And really, you can actually see this for a fact, because if somebody is focused on watching the TV and you go say something to them, they will guaranteed turn to you and say, "What was that you were saying?" And it's because they weren't present in reality. They were just programmed into this ulterior reality. If you want some great advice, cut those subscriptions, stop watching TV. We have two massive TVs. We barely watch them. We didn't watch any TV in Mexico at all. I took the Fire Stick that I have. We didn't watch anything. We have all this stuff. We don't watch it. We should really just sell the TVs. Maybe I should do a video about that. We're selling our TVs. You should too. That would wake some people up. Maybe, maybe not. Probably not. So indebted Canadians are more likely to report that debt is causing them stress, with close to half saying it is negatively impacting their mental health. Yeah, it will do, because obviously having these unbelievable amounts of debt, knowing that you're just being crushed and you're just going to be wiped out, is a horrible thing to have to think about. People will take drugs, people will drink more, people will smoke more. These are patterns that we see play out time and time again. I already saw something actually, which was probably about 8 months ago, I want to say, which was that smoking was increasing among young people. And you wonder why. What were young people looking at that point? They were looking at their dreams of ever owning a home vanish into the abyss. They were looking at just all these people around them with their fake wealth, and they have nothing. So how do you think they felt? They felt depressed, so they turned to alcohol, they turned to smoking. And yeah, it's predictable patterns. The same thing happened in 2008. These patterns just repeat time and time again. And people just say, "Oh, it's different this time, Lou. We're much more educated now. The market is different. You don't understand. Really, have you looked at the chart? Because it's exactly the same as it was back then, and the chart doesn't tell a lie." And that's what I feel like, just grabbing these people and like, wake up out of your sleep, you fool. So anyways, it is what it is. And like I said before, I just want to be clear, these markets aren't going to go down in a straight line. You're going to see short covering rallies, you're going to see massive squeezes, all kinds of things happen, and people are going to get caught up in that and get crushed as well. Unfortunate reality of that occasion. So the housing market is out of reach for most. Two-thirds do not view home ownership as being affordable in their local community. So again, even though housing prices are coming down, people still can't afford them. So how far are they going to have to come down until they're affordable? 50% corrections in places like Toronto, Vancouver. These are massive bubbles. But with interest rates as high as we have them right now, you're talking 60, 70% corrections. It just blows people's minds. They could never comprehend that. Do I think we'll see that? Probably not. I think something more realistic is 50%, 30% for places like Calgary. I think Saskatchewan, maybe even less. They didn't even see much of an influx of a boom during 2021. House prices continue to actually slide there. But again, demographics are an issue, and they continue to be a problem. And Hilliard is on this Friday. So if you want a comment or question or whatever, leave it in this video and I'll try and include it in that live stream. We're going to try and answer so many questions on that live stream. So Friday, 6 p.m. Mountain daytime. Be here, be there, or be square. That's what I was trying to say. So anyway, Home ownership has been viewed as out of reach for many Canadians for quite some time. In June 2021, Manulife's debt survey revealed 7 out of 10 Canadians, 71%, who do not own a home, worry about saving up for one. Mental health impact, like I said, including as many as 2 in 5 who worry a lot about this. Again, mental impacts of this. Do you think they're going to have kids as a result of this? Do you think the birth rate is going to decline? Do you have to be a genius to put two and two together? No, you freaking don't. But these politicians and dumb clowns who are in charge, who have destroyed economies and just plundered everything away into these asset bubbles, do not think, they think like children, not even children. 5-year olds could do better jobs than the stupid clowns that we have in charge. In the United States, we've got an old crooked old man, and here in Canada, we've got a ruthless dictator who is just a drama teacher. And the finance minister, deputy prime minister Freeland, she's a freaking journalist, for God's sake. So talk about just the clowns in charge of the country, a journalist and a drama teacher. Think about that. Drama teacher. I mean, maybe he was good at that because he just put on a good show. And then journalist, Freeland, yeah. Well, that is definitely what she is. She's an excellent journalist. She does it great within the government. And entire cities rely on the government. Like Ottawa is a government city, like 40% or something. When I was reading about the economy there, 40% of it is government. And then the rest of that probably revolves around real estate and construction. And then the rest of it revolves around services delivered from the private sector for the government. So it's a government town. And I've been to Ottawa. I walked around and everything, all the buildings, government, 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 government. It's the same in the UK when you walk around the city of London. It's the same in Washington, D.C. when you walk around there in the center there near the Capitol and everything like that. All these buildings, government, government, government. Government is too big. It's become too much of a beast. They're no longer working for us. We are working for them. And that's the problem with these Western governments and Western countries. And I don't think they're changing anytime soon. Put it that way. But anyway, that's enough of my spiel on that. So yeah, anyway, so there was something else in here that I wanted to go through. Among those surveyed, fewer than half feel prepared for rising interest rates, 46%, inflation, 42%, or housing prices, 40%, which underscores how further increases in inflation, interest rates, and housing prices could be damaging for many Canadians. What have I been saying on this channel and just beating the drum for the past 12 months that it does not matter? You can pick interest rates, you can pick inflation, they will kill everybody anyway. It's just, do you want slow and painful, or do you want fast and deadly? Those are really your choices. And at the moment, we're heading towards this fast and deadly mix because the central planners are pushing up the interest rates, but slow and painful would be just as depressing and just absolute carnage, and it would last way longer. So, in my opinion, just kill the damn thing, get it over and done with, and then the recovery can start at some point sooner rather than draw it out over 5 years and you have a 20-year long depression. Think about that. So yeah, and these countries, they ain't going to be not pretty places to live after this, and that's why we are planning right now to get out of these countries and just sever ties with them completely. And that's what we're really planning for. And we're looking to places that are posed to benefit after this, like Mexico. And really, we could do videos talking about that, and I could go off on a massive tangent. So I'm going to revert from doing that because we got more interesting stuff to discuss here than that. So The survey revealed nearly one third of Canadians admit they don't understand how inflation or interest rates work. Close to 3 in 4 do not have a written financial plan, and almost half do not have a household budget. That's particularly telling when reviewing the results of this season's Manulife Debt Survey. So, you know what's so interesting about that is they don't even teach basic economics in public schools. And even if they did teach it, it would be the government's version, which would be corrupted and broken. And it's just a disaster that is like, I mean, so people have no idea what's behind inflation. They have no idea how inflation is created. So how can you see the dynamics of this change if people don't have a clue how it's created? That puts them at a massive disadvantage. And the politicians enjoy that. People like Justin Trudeau enjoy that because they are less educated. So they're more likely to agree with his liberal policies that seemingly look good to some people. But the reality is, you can't have your cake and eat it, as the expression goes. And that really means that you can't just, the government pays for everything, spends these massive deficits, and there's no cost to me, you, or I mean, me and you. I said me, pointed to you. We are one, let's face it. But anyway, it's so funny that that is the case, and that really is just the failure of the public school system that we see today, and just how effed up the whole system is, and really the fact that people should be learning this stuff, but they don't want to learn it. Most people find it boring. But the fact is, if you learn this, you can become way more successful because you understand the dynamics of what is going on right now. Like, we on this channel understand more of what's going on right now than the government, the people in charge of this country. And I'm being deadly serious about that, guys. Deadly serious about that. So just think about that and let that sink in for a minute, because that is really quite something, isn't it? When you think about it, and people don't even have a basic understanding about economics. They don't know about risk. They just don't have a clue. All they know is emotions, and as Tony Robbins says, the Niagara effect. And the Niagara effect is basically where you're in the Niagara River and you just are following that river current wherever it goes. You don't dictate the direction of your life, it's just driven by emotion or external forces. That you might lose your job, but then you don't pivot, you don't learn anything new, you don't come back stronger, you blame everybody else for that issue, you whatever. Like, there's two different stories that can be created out of everything, and that's what I really want to say. I didn't come from a wealthy background at all, not at all. Like, I wasn't given anything, and that's how I learned to hustle from a very, very young age. From 13 years old, I was missing parties, I was missing social gatherings, because I knew that I had to deliver papers, do extra jobs, hustle, sell phones on eBay to make money to be able to afford to buy nice things which I wanted. But a lot of my friends around me, even the ones that were given things by their parents, looked at me and they were like, how on earth does Luke afford these different things? And they had no idea. And I was, like most children at that age, very materialistic. I wish I'd saved the money. I wish I was buying silver or gold at that age, but I wasn't. But the thing is, you learn when you are in bad times like that. Like, my dad was made unemployed, went through multiple recessions, had, the house wasn't always stable. I didn't always feel stable as a child when I grew up, and that affected and shaped my mentality. Most kids right now, their parents don't have time. They don't have time. Just sit on the iPad, brainwash yourself watching video games or whatever it does, but don't learn any social skills, any economic skills. And that is just really, it's just terrible. James G, super chat. Thank you so much, buddy. You really didn't have to do that, but thank you so much for supporting the channel. You are usually streaming when Yaron Brooks is. One day I have a dream you'll both stream right after the other instead of at the same time. Hustle hard. I actually checked out Yaron Brooks, and he is really great after you did the super chat that you did like a month ago, maybe a couple of months ago, something like that. So thank you, and check out that guy because it's actually very interesting. A lot of stuff he says, very very interesting guy, very interesting guy. What he says. So yeah, thank you anyway so much for that, James G super chat. Thanks for supporting the channel, man. And anyway, these things are just insane, guys, to say the least. So what else have we got here? Canadians can gain confidence and control of their financial lives by acquiring a better understanding of the impact interest rates and inflation have on their personal finances. Now, before we read any further, are they going to say go to a free resource like YouTube and learn it for yourself? No, 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 no. Let's see what they say here. So whether that's independently, yeah, that's the best option, or through support of a certified financial advisor. Now, I've got nothing against certified financial advisors. Obviously, I'm not a certified financial advisor. I just want to make that clear. And I don't give financial advice. All I'm saying is certified financial advisor, you got to find one hell of a reputable one because too many of them come and go and you can't rely on them. And really, there's a responsibility issue that comes with financial planners and advisors and stuff like that because you're going to blame them for every mistake that ever happens to you financially. Because the reality is, people need to take responsibility of the mistakes they make in life. And I know that's just unbelievable to think of that in the 21st century, like the woke culture that we live in right now. Taking responsibility of something, it's just blame everybody else. But the thing is, obviously, you can blame people and certain systems like government for certain things. But when it comes to your actual financial decisions, like buying a home, the government didn't sign the mortgage papers for you. Maybe somebody misled you down the garden path, but why didn't you do your own research? Why didn't you do your own DD, due diligence? People just need to take more of an ownership of what they do with their money instead of just looking to people and going, hey, what about this? What about that? Should I buy this? Should I buy that? I said this on Twitter today, and if you want to follow my thought feed, go to Twitter at MarketManiaCA. But the thing is, I put this on Twitter, and it was just like I I I was kind of thinking, like, when it comes to financial responsibility and everything like that, people are just completely out to lunch with it. They have zero financial responsibility when it comes to making decisions which impact their finances. And that has a massive compounding effect negatively that is a reinforcing loop of emotion, bad emotions, and they will continually make bad mistakes unless you make a mistake. And we've all made mistakes. We've all bought stocks and lost money, whatever. If you haven't, you just quit lying to yourself. You have to learn at some point. So a lot of people, the problem is they are too naive about things. So they'll go all in, all their chips into one thing, and they lose everything, and then there really is no recovery. But that really is diversification. Like I keep saying, never ever put all your chips into whatever it is. Never do that. Always be massively diversified. And then if you make a mistake with something, and I'll continue to make mistakes, everybody will continue to make mistakes, but I'll own my mistakes. Whereas most people will just say, no, no, that was someone else's fault. That BitBoy told me to buy that. But did BitBoy actually jump into your living room and buy it on your phone? No, no, he didn't. But he influenced you, but you made the purchase. And people just can't drill that into their head. They will blame anybody. I've seen it on other channels as well. People who've been talking about real estate and yeah, it's just kind of insane. King Bank says, "Is this live video going to be made available for playback?" Yeah, right after it ends. So right after it ends, it will be available to playback. And if you give it an hour or two, I'll have it separated into chapters so it's a little bit chopped up so you know which part. So you can listen to chapters in, because these videos are long. I know people can't listen to them all at once. People have, short of time. We all are. And it doesn't seem like it, but this is my hobby. That's what people don't realize. I don't come here to make money or anything like that. I come here because I enjoy it. I wouldn't come here if I didn't enjoy it. I enjoy the community spirit that we have here, and I enjoy helping people understand economics at a basic level. I only know so much. People know more than me, and I learn from them, and then I pass on what I learn and try and make it so that it's more understandable, because the way a lot of people like my buddy Emil and Jeff put things would just be like, what? When people listen to that stuff. So anyways, I try and break it down. But yeah, so yeah, this will be available for live playback. So yeah, it's really, really interesting. I don't really think. Oh yeah, there was something else I highlighted in a cyan, which is basically. So it was basically that it surveyed 2,000 people in all provinces between 20 and 69 with household income of more than 40,000. And it was conducted online by Ipsos, which is a fairly very well known polling agency, between April 14th and April 20th, 2022. National results were weighted by gender, age, region, education. The survey has a credibility of plus/minus 2.5%, 19 times out of 20 of what the results would have been Canadian adults between the 20. I don't even know what that last part means about that. I was trying to break that down. I had no idea what that meant. So, but it's interesting. And by the way, anybody who watches the playback of this thing, I linked the articles below. So if you want to go and read the whole thing and dive into this thing more in depth and read it once, read it twice, really absorb that information, I always put the links in the description below. So they're always there. So I wanted to also show you something that was, I don't think I got it. So yeah, the yield curve inverted again in the United States. So I'm going to bring this up on my Twitter because I had it there, and then we'll wrap this thing up. We're really getting on for time right now. And I try not to make these things as long anymore because I know people just don't stay to the end. So then it becomes kind of pointless doing these things if people don't watch till the later parts. That's why I've put chapters in. So here we go. All right, let's bring this up. So ignore my trade there. So yeah, this is what I wanted to show you. So this is MBS, mortgage-backed securities, and people were quite shocked when I put the MBS was crashing today. So have a look. This chart, unfortunately, it doesn't go back any further. We can't see 2008. I mean, we can on some of the ETFs, but they don't really tell us the real story of what's going on. So MBS is collapsing, as you can see. This big candle, just incredibly bearish engulfing candle there. That doesn't, I mean, usually what follows is another one of these candles after something like that when it closes. But you can basically see it is collapsing. That is a massive decline, very, very quick. And look at what happened in 2020 here. 2020, you had the massive drawdown and then it went back up. Look at where we are right now. Mortgage-backed securities completely collapsing. This is a big deal because it affects interest rates. It affects risk premiums. If there's no, Michael Burry is chatting about, basically, he put a tweet and I think I tweeted that out. So let's take a look somewhere. Yeah, right here, right underneath it. So he actually put, this was, I think, on Friday after the CPI news came. The CPI news this morning was so awful that it changed the bond market's view of the Fed trajectory, and the weakest sector broke. In bond jargon, MBS went no bid, no buyers for MBS. That's coming from Michael Burry himself. Literally the start of the GFC 2.0. To those who don't know it, this is a massive deal. Mortgage-backed securities, the market is absolutely gigantic, and it's breaking down. And we're at a point where, how can it be saved? Like, who's going to save it when the CPI is running at nearly 9%? And that isn't the reality, as you guys know it. We're smart in that. We know it's running at 20% plus. And as we said, it's inflation. Pick your recipe. If they start doing QE, come for a bailout, inflation's going to skyrocket even more, and then people are just going to be killed. Even worse, it really doesn't matter. Like, they're at a dead end essentially with what they can do. So MBS crashing means that risk premiums are going to go up on mortgages. It means that banks aren't going to be able to sell all those mortgages. So who's taking on the risk then? The bank. So that means if people default, who is taking on that risk? Who gets hurt? The bank gets hurt. It's not the investments who they pass the buck on to anymore. And we should really, I got to do a video. We did do a video about synthetic CDOs, I think, anyway, and the market and what's going on there. But again, that's just an insane GFC 2.0 is happening. I don't think. Oh, yeah. So here's the yield curve. So you had the 5-year at 3.41% inverted over the 30-year treasury, and the 10-year at 3.29%. And that actually inverted too during the day, but I think it closed under, I can't remember. And you've got the 2-year screaming to catch up with the 30-year once the 2-year overtakes. You're in the no bueno zone, as George Cannon said. And I think, but here's the heat map of the S&P 500, and you can see there it's just a bloodbath, an absolute disaster. And that wasn't including the massive drop, because there was huge imbalances that came out when the market closed on things like Apple, Amazon, where there was millions of shares that were being sold into the market, massive imbalances. So the stocks flushed and continued to flush at the end there. So yeah, the DXY ripping, like from the middle of Thursday, it has gone from 102 all the way up to 104. I mean, that is just unprecedented as well. The dollar strengthening is not good for the global economy as well. Here's what I wanted to go over: the denial phase. The denial phase is that first drawdown. So think about if it's the first drawdown in crypto. We're definitely in that first drawdown in real estate right now, that denial phase. We'll go over this in a video in its entirety, because I could spend an hour just explaining the psychology of how this works and how it will play out. And we saw a little bit of capitulation today, but that would happen in the denial phase as well. We're nowhere near fear, I think, yet in real estate, that's for sure. But we're getting close to it in the stock market. Did we just have the return to normal? Who knows? But it remains to be seen. Just things haven't been this bad since the Great Depression. And here's a picture of us with a Mexican local on Cozumel with a coconut. We stopped at this guy's stand. We were talking to them for ages. They were fantastic. They said they didn't speak much English, but their English was fantastic. Mexico gets such a bad rap. The people are so honest and hardworking. Most of them get out of the tourist areas. And we were riding around on a scooter, and this guy, just fantastic. We gave him a big tip for that coconut. We paid double for it actually, but they're absolutely awesome. But anyway, guys, that is pretty much it from me. But absolute bloodbath out there. We might be back on Wednesday for a live stream, and then Friday Mark your calendar, 6 p.m. Mountain Daylight Time, 7 p.m. Eastern Standard Time, 5 p.m. Eastern Daylight Time. Uh, no, 8 p.m. Eastern Daylight Time, 5 p.m. Pacific Daylight Time. God, there's so many time zones. It's just impossible. And some people don't change their clocks, and it just makes things all complicated. But anyway, guys, please hit that like button and do your part to support this channel. I'll get to making the chapters to make this digestible for you guys after this is finished. Thanks for being here. I love you guys. Take care of yourselves. Peace. Stay safe out there. Watch something funny. Watch the in-betweeners. Revert to means. Tell them what the in-betweeners is like in the comments. See you later, guys. Peace.